Wednesday, March 15th, market analysis. Stan Ehrlich, good morning. A little late today, 10:20, but I wanted to see how the spider was going to react here since we're starting out with stock market indexes like always, specifically the SPY, the spider, which is our first charts on our main initial screen. And as usual, you got questions? Ask me. info@ersignals.com. Right there, info@ersignals.com. Now, we have a challenge of the support level that was tested on Monday, diving and opening in that zone here with the light teal color, light blue, whatever. And it bounced out of it very, very nicely, closing almost unchanged, and did get significantly higher than the previous day's close for a while. But most importantly, by far and away, last Friday we got oversold, and we got oversold on Monday of this week. A nice rally yesterday challenged a little bit of resistance, and I will expand the daily data chart, see a little more detail. And the resistance, yesterday's rally high, stopped it at the 200-day Dow Theris long-term investor moving average, and previous lows, a little resistance. Closed on a little bit of a dip from there. This morning, we opened sharply lower, below yesterday's lows. And that's about where we are right now, where we opened, which is a very minor so far recovery. Looking at the chart on the left, this is a 5-minute chart on the left. The white is today's price action. The yellow represents previous oversold conditions and the rally during yesterday, and then coming down, and on the close, coming back up very nicely yesterday, but that was killed this morning. And the day before, we have the lowest low for the move down. That was 380.63, it looks like. Closing below that would be very bad, very bad, bearish. If you're bearish already, that's very good. But if you're not, and I'm not, I'm looking for reasons for this market to rally, stay up, and go up more than just yesterday's high, which is now the highest high for the last 4 days, yesterday. I need it to close at a minimum to start with at 393.5 plus. The really important one is going to be 407, 408. There's a little gap to close at 408. Above 407.5, or 407.70 would be excellent, and probably put us back on the long-term, intermediate to long-term bull trend. Therefore, expecting very much so a break above 18, 418, which would be a new high for months. That's not happening. At the moment, that's a wish. We're just coming up a little bit from the lows. Now, yes, we got support. Yes, it's holding at the moment. No, we don't have any reversals. We're still, for Christ's sake, down 5.5 points on the day. And if you close right here, we're super close to the previous two other lowest closing prices for the whole trend down. So this is nowhere near enough strength to get interested in, excited in. Closing around the high of the day would be better, above that previous bear trend line. Just simply, the stronger the better. Above yesterday's high is really the very short-term key here. Let's look at the DIA. We got troubles almost every place at the moment. The DIA is oversold for the third day in a row, fourth day in a row. Made a new low for the trend down, but at least it touched a support line on the DIA. So the head and shoulder bottom formation is really dead. So I'm going to erase some of these markings that were referencing that formation. And this neckline is now bye-bye. And we have previous bear trend line from the bear market of 2022. We got support and resistance levels, and we got a significantly oversold level. Those are the factors that cause me to believe we're about to see a rally, but it isn't starting yet. expectations are expectations, reality is reality, and it's not coming true yet. So until we start to get above yesterday's high, especially on a closing basis, I'm not going to get too excited about a major move up. Unfortunately, there's a lot of resistance starting at 325 in the DIA, a couple of 3-4 months worth, which is not to be ignored. So there's a lot of homework to do here in order to get up to and through 343, 344 before this turns into a long-term bull market again. Right now, it could very well be a gigantic multi-month base building activity of some sort. I don't have a great handle on it. Short term, I do like a rally because of it being oversold. Qs. We're going to change to the Q daily chart now. And a different story here. We're stair stepping our way down. We just barely got below yesterday's low, which is nowhere near the low of the last week or two or a few months, which was Monday, which was a bullish engulfing. Now, I would have gotten a green ER buy signal out of this, like on October 13th, if we were oversold, but we missed getting oversold. We were on the S&P, we were on the DIA, but the Qs just didn't come down quite low enough, quick enough to get to my 25 reading. Now, you know, Wells Wilder's RSI originally, based on daily data on the close only, used 30 as oversold. But that's back in the 1960s when he came up with the formula, and it became very popular in the 1970s, and that's when I met him and learned RSI from him, probably in the early 80s. So the Qs are a little bit different story, but still, I got to get above 304 to get real happy here. Right now, kind of neutral. And that is the stock market indexes. Futures, futures, futures. We have, I warned you, a downside breakout probably in progress. Right now, we're right smack dab at the line. But we broke the lowest lows going all the way back to October in heating oil. We got one more green line to break below, and you've got yourself a long-term bear market. We've got major historical resistance at 3.4, 5, 6, and the top of the market is 7. We got a sell signal almost on the high day. Great big move down. Lately, we had a high signal on the high day of January 24th, and we have a new low since then, and no other signal since. Yeah, you would expect on the way down that you're going to get oversold a little bit now and then. That's normal. And a little bounce now and then as a result. That's normal. But a buy signal, green ER bullish buy signal, could and sometimes does change the trend. Not here. We still have a new low. Next chart. This is quite bearish, especially if it stays below where we are and or makes a new low, of course. I kind of expect that by the end of next week, maybe sooner than that, we're going to see it drop below the lower green line at 2.3294. And if it drops below that thing, which is actually 2.3238, it's going to just drop like a rock. Next chart. Wheat. Similar circumstances proving itself correct past tense. It broke major support. It did it for a couple of days, getting oversold quite a bit, and stayed that way for a couple of weeks now. So these oversold conditions can last for days, and in this case, a couple of 3 weeks. But we're rallying significantly the last couple of days. Now it's not oversold anymore, and I'm expecting a rally back up to about 730, which should be, could be, might be, hopefully will be a new short selling area, if we can get there. Next chart, 10-year notes. Ladies and gentlemen, we are now all of a sudden in 1 week, all the way back up, very close to the highest highs since last September. I've kept mentioning again and again that the interest rate futures charts look like they are building intermediate to long-term bottoms. That means a high in rates, and rates will go down as this chart goes up. They're inverted. So a new high and a new high close in 10-year notes and bonds both should be the beginning of a long-term decline in interest rates. Yep, mortgage rates, etc. Not there yet, and we are getting overbought the last couple of days. So more base building may be in store first. In other words, a little pullback, going back down to 111, 112 again. Next chart. Soybeans, no comment. We have a pennant formation forming an OJ. Keep an eye on that pennant formation. Usually they're bullish when you were going up before the pennant formed. Next, cattle, no comment, a little oversold. Sugar, pass. I want to get to some important stuff here. Heating oil, minor new low, not quite oversold yet though. Cocoa oversold, new lows, probably in an area of support, going to rally soon. Next, hogs, pass. E-mini, just like the SPY, of course, coming back up above previous lows slightly. Closing here would save the day, but it's not good enough. You got to start making higher highs above. Look at this, 3 to 4 days in a row, very, very close highs. That means there's going to be a lot of buy stops above the highs of yesterday, the day before, and the day before, all clustered in the same price level. So we get to that level and start pushing through it, it's going to pop and rally very sharply, very quickly because of a heck of a lot of buy stops. That would make me happy. Not happening yet. Not happy yet. Worried about this lower close potential. Not oversold yet either. So there's downside room. The low Monday challenged major support, the lows in December. You break Monday's low, you're breaking last December's lows, you'll be new lows since early November. Yikes. Not good if that happens. Next chart. Bean oil. Got oversold the last few days. I'm looking for a rally in a bear trend, maybe up to 57.80-ish, even a little higher as possible. But we've had new lows now for a few days, ever since July. That is not what bull markets typically do. So I am expecting the area of 51.5 to be challenged soon. Maybe it'll take a week, probably 2 weeks at the most. And then if we're oversold still, or even more oversold, which could be a pretty good rally. If it breaks below those July lows, you know, Katie bar the door, down the tubes it goes. Next chart. Natural gas. We picked the bottom of the market. And that was February 22nd with the green bullish engulfing ER buy signal. It's built. It took me 10 years to get this to where it is. To pick the day the market turns frequently. Next chart. And sometimes these are highs for many, many months or lows. And sometimes they're high and lows for only several days. But they're turning points with profit potential, sometimes gigantic. Look at the crude oil. We have crashed through the support level that we challenged yesterday. Getting a little oversold yesterday and now significantly more oversold. There could even be another 1 day down, maybe even more, but a little bit more lower. But now we're in such low territory in RSI that you should expect at any time a rally back up to where? That red zone, 71.5, 72 maybe, somewhere in that little red area resistance. My best shot would be about 73 flat, real close to that. The high of today, which stopped it today, in the next few days to a week. And then that would be a good short sale. Not here, too dangerous. Next chart, corn. Got very oversold. Now, for the first day in a week, not oversold. All day above 25. A little bit more of a rally. Minimum, I'm looking at 634. Could pump up even more Wouldn't change the overall trend to 650, but I want to sell on a rally. Hopefully I'll get a bearish engulfing. We'll see what happens. Next, and an ER sell signal, not just the engulfing, but that would be the beginning of it at a minimum. We caught the bottom of the move. Here comes precious metals, silver. We caught a long position on ER1 at about 20.40. Today, currently 21.87, but that's way from the high. So this has worked very well and still, I think, working. And I'm thinking we're going to get maybe up to 23. Wouldn't be surprised. Next chart is platinum. We picked the bottom again. That's the low day. We're long in the ballpark of either 952 or around 930. Remember, I have an ER1 that trades the same day that's at green or red on the breakout of the engulfing, and an ER3, which is a retracement trade. So we need to come back into the range of the bullish or bearish engulfing in order to get an ER3 fill. That's what those little green dots are doing there. So this is okay, but this is a pretty sharp down move. Now, with all honesty and likelihood, we were stopped out on March 7th when that big down day occurred with some sort of modest profit, nothing great, but a profitable trade. And at the moment, we're probably flat. Unless you like to use these signals for long-term trades and move your protective stop very slowly. And we can do that with our strategy. It's totally flexible, very, very flexible. What's important is the green and red bars. Right on top, red, sell signal. Almost on the bottom here, green. Almost on the top there, red. On the top there, red. Almost on the top there, red. Next chart. Gold. And yep, we did it again. And today, it's a new high and a new high close likely since February 28th when I screamed bloody murder, we had a buy signal. And there's no ifs, ands, or buts about it. You could have bought it pretty darn close to the low of the green buy signal. That was a gutsy move, but nevertheless, if you did buy it down here at around 1,817-ish, 1,817-ish, you would have had a very, very small risk because the fail-safe sell stop is the yellow dots. We never, never, never let them go beyond the yellow dots. If you're short above the yellow dots, if you're long below the yellow dots, that's our initial protective stop. It does move pretty darn quickly when you're running the code for ER1 and ER3. All I'm showing you here is the basic signals. You can do what you want with them. We sold the top of the rally. We bought the bottom of that big break on a triple bottom, the first low of the triple bottom back in September 28th. We bought the bottom day on July 20th of 22. And they clustered. I tell you again, sometimes I get green 2, 3, 4 of them within approximately a month, which we did here. They cluster. I get buy signals around and hopefully including the actual turning date, which is exactly what happened in July of 22. Now, it happened again, but the rally wasn't that good in September of 22. Nevertheless, profit. What makes the world go around? Money, money, money. Next. Overbought for the last couple of days, getting too strong, too quick in bonds, but just like 10-year notes, right up there, critically close to new highs for quite a few months. I'm not sure it's going to break through it. I'm kind of thinking maybe not because it's overbought right now and for the last 4 days, including today. So what next? Probably a pullback into this range. I'm going to give you an educated guesstimate of 28, 27, something like that in the next 3 days, maybe 26. But I favor very much so the long-term trend changing soon, but that soon may be a month or two. I don't see any rush to come up with a statement like tomorrow. Next chart, heating oil, breaking that support level. I'm back to where I was when I started, I'm going to talk about forex for a moment and sectors also, but I'm going to scan through them real quick. Euro dollars slam dunk today, almost 2,000 pips lower at the low. Actually, I think it was. I think it might have been, yeah. And that is a tiny new lows ever since the low in a support area back in January. So support held so far, but this looks like a severe blow, and the euro dollar probably is going to make new lows for months soon. We're not oversold. We're not even close. Next chart. And that would be dollar index should be going up, which it is. I think we may have an outside up day, but it wasn't. Yep, looks like a key reversal, but we weren't oversold, so I'm not getting a green bar. I like the key reversal. I mean, that's good by itself. It's a very reliable, one of the most reliable candlestick formations. And it's easy, a single day formation, not a double or triple day kind of combination thing. All right, next would be the dollar. The yen is a brand new signal today. A bearish engulfing ER sell signal on the US dollar to the yen. That means the dollar is going down, the yen's going up. So the first symbol, USD, indicates which direction. Now, we'd bought almost the bottom of the market back in January. Great signal. And wow, what a sell signal we got on the top of the market back October 21, 22. So these signals do, in fact, produce huge profit potentials and sometimes minor ones. When they don't work, which, you know, they don't work sometimes, I think I've got an example coming up in a moment. We take losses, and they're usually very, very small losses compared to the profit potentials or profits period. Next. That's it for forex. I'm sorry. Yeah, forex. Here's the sector charts real quick. This is the banking sector for the S&P. Now it's challenged the lows, but we're oversold. We're base building. The gap was closed yesterday on a big rally. It didn't hold very well. It closed poorly. So today we opened significantly lower, but not a new low for the move. And we're above where we opened. So there are signs that it's trying to build a little bit of a bottom. And I think that's the right statement to make. Let's look at the next symbol, XLF, also the banking sector, but in this case, the spider, the SPY, the SP, financial spider. New lows, new low close probably, oversold. Don't chase a market down, especially when it's oversold. You're asking for your front tooth to get knocked out. Sorry about that cough. Next symbol, gapped down. This is the one I was mentioning before. Yesterday we had a buy signal, looked good, everything was fine. Didn't work. We opened below yesterday's low, took a little bit larger loss than normal. We're out at the high of the day. Oops. Standing aside, waiting for some signal. We're oversold for the third day in a row. Nowhere to go short. Not a good idea. Plus, there could be an exhaustion downside gap here. Now, I know this is new lows for months. Normally a very bearish thing, and still could be. What happens if we only rally back up to the gap closure, which would be 277-ish, and then start turning down? That's the bearish part. But for the moment, oversold and a gap up above implies that we're going to come back up to approximately 277. What happens after that, if it starts heading down, could be really bearish, intermediate to longer term. And that's second to last. This chart, XLB, gap down. So there's a gap to close. It's almost exactly the same story, except that we got a very profitable sell signal only a week ago. There's our red sell signal on March 9th. Way new lows. new low close. But again, oversold, don't chase it down. And a gap to close on a rally up against resistance, which is now used to be support until today. Now it's resistance because we're well below it. So we're going to rally back up and close this gap, I expect, and that could be a very good short sale price around 77.5. Our last one, XLK, neutral, nothing to say. I'm going to leave you there. Thanks very much. You have a great day. See you tomorrow. Bye-bye.